All right, this is the weekly COMEX Gold video analysis for the week of Monday, August 31st. The market that we're covering that mostly will be weekly continuation charts, volume-based rollover, which means that volume-based rollover means the charts always reflect the lead most active high volume contract, which is presently December 20. So this is the DEES 20 contract. You're looking at a weekly chart here. If you've been watching the gold videos, I think one or two I've made in the last month or so, you'll know that we took out this 1923.7 high from 2011 some weeks ago. Despite the fact that the market has broken below it on an intra-week basis, we've never settled any weekly session below it. So that is a preliminary support area. I also have other support in this region I'll show you in a moment. The big takeaway with this market, with this chart, is we remain bullish into next year above this 1753 even longer-term speed line that's projected off the 2015 low. This is our trend support. So even if we close below the 1900 handle support, 1923.7 for instance, 1753 does become kind of a 3 to 5 week target. But 1753 even able to contain selling through the rest of the year. Once tested, the market can push on to new highs within a matter of a month, 2 or 3 of that. And in fact, this 2438.2 formation is considered a longer-term objective. The market's been consolidating the last 3 to 5 weeks, and it's in this range-bound mode, which you can do for extended periods of time. But overall, so long as we're above 1753 even, the market can make ever higher highs over the course of the next year or two, or however long it actually takes to reach 2438.2. Volatility has constrained a bit in the last few weeks, but nonetheless, this level, 2438.2, is in reach over the coming months. Now, so let's talk nearer term. This is the big picture. We'll talk, here's another shot actually. You can see you have other things in the 1790s, old highs, 1793, 1798. I'm just putting out there for, for visual reference and for understanding areas that could hold on the way down. But 1923, this former 2011 high, and the recent high in August, 2089.2. Let's talk support. This is near-term support now. And by the way, I do have this noted in your support and resistance for the week, which is the PDF file you can click on that you've obviously clicked on to access this weekly futures video link at the top. But we have respectable support in this 1901 half to 1924.4 area. Multi-week containment can contain selling essentially through September, and above which we should reach 2171.8 over the next 3 to 5 weeks, which I will show you in a moment. But here's your support. It's a former trend line off some highs. It's held roughly. It's also very similar, obviously, 1924.4 to the former all-time high at 1923 even that was put out once again in 2011. But I think you need to allow the market to test this region. We are bullish through September above 1901 half, which is this ascending channel bottom, preceded by this other area at 1924.4. This zone of support can contain selling through September, and above which 2171.8 is likely over that time horizon, which is nothing more than the channel top. And this channel top is rising a bit every week. It is a zone that can contain monthly highs. So, we're basically trading inside of this formation, the base of which is at 1901.5. The ceiling is at 2171.8. And so this is a near-term framework that, as we continue into October trade, we can certainly trade inside this zone. If we close this week, Friday, below 1901.5, then the 1753 even long-term speed line becomes a 3 to 5 week target where the broader gold futures market can bottom out through the rest of the year. And once again, I will show you that speed line, 1753 even. So closing once again below 1901 half at the end of the week, 1753 even, a 3 to 5 week objective where the broader gold market can bottom out through the rest of the year. Let's talk upside. You know, you've got, if we can take a look here, we've got 2058.8. It's weekly containment only. I also have 1975.2. I'm giving that 2 stars. That means that it could, if we test it, say on Monday, contain buying into Wednesday or so. But overall, this is your support structure that I showed you a moment ago. These are minor tradable levels. If you're an aggressive day trader, position trader for a day, 2 or 3, these are good areas. 1975.2, a good level to trade into mid to later week. From here, we can fall back into the lower 1900 area within a full week of trade. If we close above 1975.2, say on Monday, then 2058.8 is then expected within a matter of days. And I'll just show you that 2058.8 is nothing more than those. This would show up very clearly on a daily chart and on an hourly chart. This is a weekly chart. It doesn't look so fancy, but it is just a simple ABC channel top, which is at 2058.8 this week. If we test it this week, and once again, it becomes a 3 to 5 day target above 1975.2. If we test 2058.8 this week, it can contain weekly highs. There's nothing significant about it. It's not an area you want to sell into in anticipation that the market will fall back into later September from it. And in fact, closing above the 2058.8 level does indicate bullish continuation to this channel top within just about 1 to 3 weeks. That channel top once again at 2171.8. And let's take one more look at that channel top, just near term in scope, 2171.8. If tested between now and the end of September, can contain buying through October. From here, the market can fall back to the channel bottom. But if we close the week Friday above 2171.8, and I don't see that happening, you probably don't either, then we should reach this longer term objective. And here's 2171, where the pencil tip is. 2171.8 is roughly right there. If we settle above it, which is that channel top I showed you a moment ago, you can see that under that scenario, another, 3 to 5 weeks perhaps, we actually reach into this 2438.2 area, longer term channel top, able to contain buying through 2021. We're not far from 2021 as we speak. Trying to think if there's anything else I need to add. All of the minor points are well chosen. They are suitable trade levels. If you're an aggressive day trader, you're an aggressive position trader through the week itself. Holding up once again above 1901.5 to 24.4, anticipating the 2171.8 area by the end of September, where the market can top out through October, and this 2171.8 is the point to settle above for indicating that long-term resistance area I showed you a moment ago at 2438.2 within another 3 to 5 weeks or so. Closing below 1901.5, once again, 1753 even becomes a 3 to 5 week downside target where the market can bottom out through the rest of the year and possibly well into next, and above which long-term gold, that is to say into next year, remains bullish. If we were to settle any week below 1753.0, that indicates not only a good annual high, but probably a good high through next year. The market then likely to continue south. I don't have a downside target yet for that. I know in a previous video I mentioned the $1,400 area, but we'll just see. I don't expect to see us closing below the 1753 even speed line anytime soon. Once again, we need to close below 1901 half the end of this week just to indicate it. Until then, we are in a stable to bullish dynamic through September above 1901.5 and really through the rest of the year above 1753.0. And that is all I'm going to say for this week's COMEX Gold Futures video. So do yourself a favor.
Fill out the free trial form on this website. Take that 2-week test drive. You have nothing to lose and much to gain.